Hello, welcome to Wealth FX, and I remain your host, Mr. Babs. Today, I'm going to be talking about one beautiful concept in the concept of Forex trading that I find so interesting and intriguing that most traders tend to, pay less attention to. And now, what is that concept I'm going to be talking about? It is what I call demand and supply. Now, there's this conventional general knowledge that as a forex trader, most advanced traders do it as well, but most beginners tends to make that mistake because I once made that mistake as well. Now, what is that common mistake? It is the idea of support and resistance. There's this general understanding that when you see a chart that you should buy at support and then sell at resistance. But over the years, over time, it has come to our notice and our knowledge that this does not completely work most of the time. In short, a good percentage of the time, yes, price bounces off support or sells off resistance, but then you tend to find out that okay, price in such a way always sweeps the liquidity at support and the liquidity at resistance. Now, before I go into the concept of demand properly, I want to first of all remind you about the concept of market structure. Now, market structure, of course, is after because every chart is made up of candlestick bars. Now, the combination of these different candlestick bars tend to come together to form the chart. Now, when you're analyzing the chart or you're looking at the chart, you have to first of all identify what direction is the chart going. Now, just like we already know, normally for a we have the chart can be specified into three different phases. The first one is the uptrend, the second one is the range, and then the third one is the downtrend. Now, for education purpose, now for education purpose, yeah. Now, for education purpose, what do we notice? Now, when you have an uptrend or when you are in an uptrend or when the price is in an uptrend, you tend to notice what we call higher highs, and then higher lows, and then a new high, and then a new low. Now, for this trend to continue in an uptrend, price has to break the previous high and then make a new high. And then as long as that trend is still trending, we would not have any reason to break below the last low, which is this point. So as such, we're expecting price to create a new higher low as it continues into the upside. Now, after price has been trending upward for quite some time, what we tend to see most of the time is a range. Now, a range is kind of when price is within a particular zone, it is not breaking out and it is not breaking necessarily below, it just remains within that region. Now, sometimes this could be seen as a pause phase. Maybe people that have been longing this particular trades are taking profit at this zone, or maybe new buyers are looking to start buying, or sellers are now coming into the market expecting the market to start selling lower. But now, what do we do at this point? After the trending phase, which is the uptrend, the range, now the next phase most times we tend to see is either a continuation of the trend into the upside, or sometimes what we tend to see is a reversal of the area. Now you tend to see price do things like maybe after ranging in that zone, tends to break out, do a pullback towards entry or towards the break, and then continues lower. Now for downtrend, what do we have? Price shifted from higher highs and higher lows, higher highs and higher lows into a range of both equal highs and equal lows, and then it breaks out of the range, forming a new lower low and then a new lower high. And then for the downtrend to continue, we have a new lower low, a new lower high, a new lower low, a new lower high, and that's how the downtrend continues. Now, why are we talking about this before we dive into the concept of demand and supply. Now, of course, like I said in the beginning of the video, most cases we tend to find out that we're asked, or the general knowledge says buy at support, sell at resistance. But now there is actually a zone that is more interesting, or more suitable for high probability trades when you are taking analyzing your chart, and that is the demand and supply. Now, just for education purposes, let me clean this off my screen. Now, for education purposes, let me show you a concept of what your support and resistance looks like in comparison to your demand and supply. Now, first of all, before I do that, what is your demand and what is your supply? Your demand is actually the extreme zone, or the last zone further before a significant impulsive move. Now, when I say that, what do I mean? It means that, for instance, if you had price ranging slowly, and then all of a sudden you notice that, okay, price does this, and then boom, skyrockets. Now, it is expected that around this area there's going to be a small candle that price made in this zone before it literally now skyrocketed into the highs. And for a downtrend, we're expecting the same thing as well. Maybe price has been ranging for quite some time, and then all of a sudden we notice a huge drop. And a small, there's definitely a small candle. There's definitely a small candle. Yes, there's definitely a small candle which he made before dropping below. Now, when you are trying to use the concept of demand and supply, how do you identify it? Now let's go to a chart. Now this is gold chart on a weekly time frame, and I want to take us to, to the four let's go to the daily time frame. Now, exactly, speaking of demand and supply, if I was to pay attention to this daily chart of gold, now according to my definition of demand and supply, that means my demand would definitely, like I said, would be the last area before the impulsive move, the last area before the impulsive move, the last area before the impulsive move, and that's how I'm going to trade it. And the same goes for the sell, which is the supply. Now, for support are areas of equal lows, but most times price tend to break this low doing what we call a liquidity sweep. And now when you have this liquidity sweep, there tends to be an area either below it or above it that seems like a magnet for price, that price would most likely tend to approach or retest before it begins to move in the proposed direction. So of course, if I was to pay attention to my demand zone for this trend, for instance, starting from where we are currently, my demand zone would definitely be something around here for this trend. And yeah, this will be my demand zone, the last significant move before the impulsive move. And yeah, if price breaks out of a demand zone, there is every probability that the next time price comes to retest or fill that area, I think there's a fair value gap somewhere in between here. Yes, there's an imbalance. The imbalance is this small space here. Now for that imbalance, let me bring this to now for that imbalance, the imbalance is definitely in between this space between this week and then this last week. That will be the imbalance. So of course, the next time price fills that imbalance, we're expecting price to shoot higher. Now, this particular demand zone has been liquidated by this retest. So of course, as price progresses, we're going to be looking to find another imbalance. And now if I want to trade the imbalance with this, like what I have here, I have two zones to watch out for. Now this will be the most recently broken zone, and yeah, I have one here, and then I will have another one here. Yes. Now, these are the two areas I'm literally going to be looking out for price to probably get to and bounce off, or get to and bounce off. Now, I might not be paying attention to the first one because it has been liquidated here once, and then it's possible that price might use this as a liquidity grab and test, where we have equal low, which is going to be support. Now, and instead of trading or buying at this support, I rather wait for price to come towards my demand zone, fill my orders, and then I'll be looking to trade with the trend into the highs, because this is actually a bullish trend for gold. Now let's pick another example before our time runs out so that it makes more sense. And of course, I might not be able to finish completely the concept of supply and demand in this video, but trust me, I hope I've been able to simplify it as much as possible, especially for those that are looking to add this to their trading arsenal. Yeah, now this is GBP USD, one of the most traded currency pairs in the forex market. Now, if I pay attention to what I have been talking about, I said demand or supply is the small move, the smallest move or candle before the impulse. So if I was to pay attention to this, what do I have? Oh wow, my chart is full. So let me quickly take off all these, and then we'll start afresh. Yeah, this is how I analyze my charts for setup, paying attention to technical analysis, chart patterns, candlesticks, and demand and supply zone. And of course, yeah, before I even start paying attention to any other thing, I want to make sure that I am analyzing it from a zone of interest, which is either my supply zone or my demand zone. Now, supply is of course relative to a downtrend move, and then demand is relative to an uptrend move. So yes, we look for demands in bullish trends, hoping to buy the demand, and we look for supply in bearish trends, hoping to sell the supply. Now, most times as trend progresses, you will see what happens on the higher time frame as well happening on the lower time frame. But and this is called fractal nature. That means what you see on the higher time frame as well can be found on the lower time frame. Now, I think I've lightened up my chart a bit. Yes, exactly. Now if you pay attention to this move, we have this initial move here. Now this is going to be the initial demand zone, and is the extreme demand zone, which is here. Now, after this small red candle here, we had this bullish engulfing, a break of structure, close above, and then price came to retest that imbalance here. And since then, it pumped, and after which price has not come to that zone again. Now, because this is an uptrend, of course, higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, higher low, a new high, higher low, a new high, higher low, a new high. Now we're expecting that if this trend is to continue, we're expecting a higher low because this is an uptrend. Now for me to see that this trend is most likely, excuse me, is reversing, I should be expecting price to break below this structure. But as long as price stays above this last low, which is here, then I'm expecting that price should actually be in an uptrend. Now for me, if I want to identify my demand zone, I have this first zone here, a small move before the impulse move. We have one here, and then we have another one below. Now exactly, so if I'm looking to buy this bullish move, I'm looking to buy it either at any of these zones, of this zone to continue higher. Now, I could have picked this, but there's every possibility that this has already been retested, so price might literally do a liquidity sweep around here. So I hope this video helps you. I look forward to seeing you in our next video. Do have a wonderful day and enjoy the rest of your evening. I remain your host, Mr. Babs, and this is Wealth FX Trading Made Easy. Have a blissful day. Ciao.